over a decade that central banks are literally, I'm going to say the word again, literally, in a race to the bottom to see who among these institutions can suck the purchasing power out of their currency faster, and we're paying for it. We're paying for it literally. It's astonishing to me how many people don't understand how it works here. People think that the price of this just happened to go up because maybe it's more scarce or because it's really in demand. No, it's because the currency is being devalued. And this mechanism is going to go on and on. Don't take my word for it. Listen to Goldman Sachs, okay? Goldman Sachs is telling you commodities prices are going to gain as they cut rates. But this is nothing. This isn't even the beginning of it all. If we know that, what do you want to do? You got to take action. Commodities, commodities, commodities. That's where you got to be.
Market trader Gregory Mannarino highlights a concerning trend among central banks, characterizing it as a race to devalue their respective currencies, ultimately eroding purchasing power. For example, the Central Bank of Egypt recently raised its two benchmark rates to their highest ever levels and devalued the currency. Egypt's significant interest rate hike and currency devaluation, exceeding 38%, are strategic moves to secure billions more in loans from the International Monetary Fund. Mannarino emphasizes the importance of investing in commodities as a hedge against currency devaluation, noting their ability to retain value amidst declining currency worth. Goldman Sachs supports this perspective, predicting a rise in commodity prices as central banks implement rate cuts. The anticipated rate cut from the U.S. Federal Reserve is considered particularly significant. Although the Fed has indicated no immediate rush to reduce rates, it has outlined plans for 3 rate reductions this year. Goldman Sachs suggests that commodities such as copper, aluminum, gold, and oil products may experience price increases in response to these rate cuts. However, the bank advises investors to be selective, as gains may not be uniform across all commodities. Mannarino explains that when central banks cut interest rates, they effectively increase liquidity in the market by purchasing debt. This cash injection into the financial system can result in currency devaluation and inflation, despite efforts to portray inflation as decreasing. Furthermore, China's central bank is anticipated to lower a key policy rate and inject additional liquidity into the financial system on Monday. This move aims to address deflationary forces and stimulate lending to bolster the economic recovery. Join us as we delve into Gregory Mannarino's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
If you believe that currency devaluation by central banks is going to, by some miracle, stop, well, then I think you're deluded on a grand scale. It is not going to stop. Central banks have, I've been telling all of you, literally for over a decade, that central banks are literally, I'm going to say the word again, literally, in a race to the bottom to see who among these institutions can suck the purchasing power out of their currency faster, and we're paying for it. We're paying for it literally. Again, understanding what's happening here. It's astonishing to me how many people don't understand how it works here. People think that the price of this just happened to go up because maybe it's more scarce or because it's really in demand. No, it's because the currency is being devalued. And this mechanism is going to go on and on. Don't take my word for it. Listen to Goldman Sachs, okay? Goldman Sachs is telling you commodities prices are going to gain as they cut rates. But this is nothing. This isn't even the beginning of it all. You know how this is going to work out, and it's going to be on a scale, again, that people are not going to believe. Debt market meltdown, which is going to happen. We're already in a full-blown liquidity crisis. You know that. Okay. What are they going to do to kind of fill in the gaps? They're going to print more cash out of thin air, right? Miss Williams, Jana, nice name. Absolutely. That's where it's going to go. And we already know that. So if we know that, what do you want to do? You got to take action. Commodities, commodities, commodities. That's where you got to be. And, in this case here too, it's the stock market. Again, everything becomes more expensive, even shares of stock. So the illusion of the market is maintained. Do you see what's going on? All the things that you and I have covered over and over. Well, here it is. It's in our freaking face. It's absolutely incredible. Honestly, it's all fake. It's all artificial. It's just an environment like nothing we've ever seen before in history. But again, look, as I was talking to John Dowling earlier. This is an, when you have this kind of thing, all right, it just means that opportunities open, doors open, and doors for commodities, as you well know. Look, most of you here that have been with me already own probably a lot, or at least I hope you own some silver, gold, platinum, palladium as well. Maybe you do have access to commodities via an exchange traded fund, like I've suggested in the past here. Staying long the market. This market is the gift that keeps on giving, people. You can pull those profits and put it into something else here. Central bank cuts rates. They can't just say, hey, we're going to cut rates. No, they have to get into the market and buy the debt. Now, where do they get the cash from to buy the debt? They add it to a digital screen. Click, 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 click as much as they want to. And they get into the market. They buy the debt. Now, central banks around the world are going to do, the ECB and the Fed especially, lockstep, bang, 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 bang. That's what they're going to do. We're going to see a phenomenon occur, central banks cutting rates, and we're going to see massive currency devaluation. Okay, you're not allowed to know that. When this is massively inflationary, what's going on here. But again, we're going to be sold yet another lie. Imagine my shock, imagine your shock, that inflation is coming down. They're already pushing this narrative. Inflation is coming down. Inflation is dropping. It is not dropping anywhere. Okay. The pace happens to be slowing at this time, but I believe that's going to turn around too. Fiat currency is dying. They're going to kill the system, people. They're killing the system methodically and deliberately, only to issue in a new system of maximum control. And people are lining up for the slaughter, and they're being led to the slaughter via the propaganda ministry, by politicians that won't tell us the truth. No one's going to point their fingers at the Federal Reserve and tell us what's going on. Okay, we have to discern this for ourselves, and it's not that hard to do.
Mannarino underscores Egypt's recent IMF bailout, largely facilitated by the Federal Reserve, as indicative of a broader trend wherein nations increasingly seek financial aid. Central banks, notably the Federal Reserve, play a significant role by providing liquidity to address substantial debts and deficits. According to Finance Minister Mohamed Mait, Egypt is expected to secure financing worth $3 billion from the World Bank as part of a larger funding package from the IMF valued at $20 billion. Last week, the central bank announced a 600 basis points increase in interest rates and allowed the exchange rate to fluctuate based on market mechanisms. Consequently, the dollar exchange rate in commercial banks averaged 49.5 pounds, up from its stable level of 30.9 pounds over nearly a year. Mannarino highlights the perceived certainty surrounding the Federal Reserve's future actions, with expectations of coordination with the European Central Bank. Despite recent market fluctuations, the overall trend has been upward, albeit influenced by the dollar's relative strength. Let's get back to the interview.
The market is still, maybe it's torn a little bit between what the Fed may or may not do. For me, it's a lock across the board. I can't even say this another way. It's an absolute lock what the Fed is going to do. They're going to do this in concert with the European Central Bank. And we got a word here from Goldman Sachs about that. And then we'll talk about that in just a moment here. So let me just touch back on this market. Market didn't do too much. We finished slightly negative today. Okay. It's the dollar relative strength that gave us a clue here. But this market's done nothing but go straight up. It's a freak show on a monumental scale, and you all know that. I want you to pay attention to something here that's being hidden from the people. Imagine my shock and imagine your shock. So every week, pretty much, we get economic news about this, that, and the other thing. And it's praised as the next greatest thing since who knows what. Then all of a sudden, kind of quietly in the background, these numbers get revised lower. And they hide that from you. They hide it from you. And we're seeing a lot of this as of late, especially with regard to retail sales, home sales getting revised lower. So just remember that all this, and you get it already. I know you do if you follow this blog. It is propaganda, upside down, backwards, and sideways. There's no truth at all. The data is all fake. These so-called polls that they do from leading economists, they're all fake. They're all engineered. So I just want you to remember that. Now, for those of you that have been with me for a long time, and there are some of you have been with me for a really long time, since the beginning. When we watched banks, the major institutions, getting bailed out, I said the next step, or the next meltdown, nations were going to have to be bailed out. Well, that's already playing out to be true. So it looks like Egypt here is getting a unbelievable 40 billion first installment bailout here by the International Monetary Fund, who's run pretty much by the Federal Reserve. Yeah, we're now bailing out an entire nation, and this is going to sweep the globe. Nations are going to need bailouts. This is the central banks consolidating. Where does the cash come from? Where does the cash to come from for all of this? The monumental debts and deficits that we run that are completely out of control. Well, I'm going to give you one guess. It comes from the central banks around the world, nations here. None more so than here in the United States. Our economies are in shambles around the world. Okay, this is, again, deliberate. This is central banks doing their very best and very successfully to destroy the global economy, to take down the consumer with it. I've outlined this since like forever. So we are seriously here in the United States. I mean, if it were not for the Fed making up for all the debts and deficits that we're running, we'd be done. So you can already say that we're being bailed out as well. It's just, and we're exporting our inflation to the rest of the world. We continue to export our inflation to the rest of the world on the back of the dollar being the world reserve currency, and nations around the world are sick. They're sick of it. You blame them? BRICS Alliance is part of, again, more talk about the anti-U.S. alliance. They're setting this up. If you can't see what's being set up here, more war, more death, more pain, more suffering, then I don't know what to tell you. But that's kind of where we're going with this entire thing.
The Federal Reserve's potential involvement in addressing high inflation and housing costs during an election year could be contentious. Rate cuts, aimed at economic stabilization, may face criticism from figures like Republican challenger Donald Trump, who could argue political bias in favor of Biden. This challenges the Fed to maintain independence while navigating political pressures. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.